Hi, folks. It's Hank. So we had a couple of earnings come out tonight. One in particular I'm going to cover here is going to be Cisco. As you can see on this chart here, Cisco dumped from 85 all the way down to like 78 half the hours from the earnings. Reason, even though they beat top and bottom, but it wasn't a good beat, is their guidance. The guidance projected strong headwinds associated with cost of chips. Um, they have a good momentum as far as like their AI infrastructure, building that out, supporting that. But guidance is everything. So what do we do from here? Where do we go from here? This is a 4-hour chart to show that it showed off to close at 79.05 after hours, which is all the way down here at this level, right? So we marked that level, say 79 is right here. It's coming back into this area of questionability, right? And if they break back in here, you probably can look at a lot lower on this. All overall, earnings are not going well this season for tech. Donald's had earnings that came out tonight. That wasn't, I mean, they shot all the way up and they sold all the way back off again. It's just not going well. So what is the next move on Cisco? How do you want to play this? Do you really want to trade this, going forward? Where would you get in, right? I think we're at all-time highs, which we are up here. And now with the headwinds associated with, memory chips, and, memory chips are costing a lot of money these days, all right? So what do you do in this range? Well, I would wait for this trend line right here. If this comes down, look for it to come back and test 75. We're already at 79. Test 79. If 75 breaks, this trend line breaks, you're looking to come down to 66.70s. That is the next level of real good support. There is something here, but it's not strong support at 72s. So you break through this, you could bounce to 72, which might be, if you're selling all of this off, you're down here, you come down here, break this trend line. Zoom in here a little bit better for you so you can see that we're talking about here. So this would be the move. You're 79, you come down, you hit this trend line, you bounce, and then you come down and break this to go down to this level here at 72. That is the downside move that I'm looking at on Cisco. With the rest of the tech sector not doing well in earnings, they're all selling off for the most part. Other companies are coming out, their earnings aren't all that great. It's dragging the market down. Now it's going against what the narrative of the index and the triple Qs were doing, still holding up their all-time highs range, while the rest of the sectors that actually hold the weight of it is going down, with the exception of one, Apple. So if you look at the triple Qs here, we're near the all-time highs is up here. So we're in that range, right? You have a trend line going up right here. You have the all-time highs right here. Okay. So you're kind of in this wedge going up, which could break and come down, or you can go up and break this and go higher. Apple was like one of the only ones doing well today, despite the rest of them selling off. Even they pulled down into the close, right back into the top of this channel that Apple's in. So all in all, Cisco did good, but not good enough. And that's why it's down here currently at 79 and could break and go lower, ultimately test at 72, possibly coming down even to the 76s low. I'm Hank. I'll talk to you guys later. Take care. Hi, folks. Hank from SixFourTrading. If you like this type of content, and if you want to trade with me live in my Discord, there's a link in the description below. I hope you guys trade well, and I'll see you guys in the Discord. Take care.